Let's now connect with Ajoy Misra, Managing Director and CEO of Tata Global Beverages. Ajoy, good morning. Thank you for joining us. Starting with your Q4 numbers, the branded business continues to grow. What is aiding that, and what is the average volume growth which you've witnessed?
India branded business continues to show good growth. We've grown between 6 and 7% in India. All our brands under the umbrella Tata Tea brand, by and large, are doing well. It's been a good year in that sense, and it's driven by volume increases. So that's the good news. That means there is good underlying growth happening here. In terms of coffee, 8 o'clock coffee in the US, that business showed good growth to us in the US market. Our growth in the branded business got affected a bit by the challenges in the UK market, where the Tetley brand plays. So roughly, those are our major brands that have played out in the year. Then there are some smaller brands, such as our water brands, which play with Nourishco, our joint venture with Pepsi, which is Himalayan and Tata Gluco Plus and Tata Water Plus. They have had a good year. So this is roughly the picture of our branded businesses.
Right. Why the weakness in the UK market? Is Tetley facing some problem because it has presence not only in UK but Canada too, from where you do get a decent chunk of your revenues?
The category of black tea has gone into, after a period of stagnation, has gone into decline, and the declines has accelerated, and therefore, showing growth out there is a challenge. However, what we have done is, over the last 4 years, we have made an entry into the non-black tea categories, which are small, but they are showing growth. And as we change our mix from predominant dependence on black tea to green tea, specialty teas like decaffeinated tea, fruit and herbal teas, red bush teas, these are categories that are growing. And we actually, even in the last year when we've been under strain overall, all of these categories we have grown market share. It's just that the proportion in value of these non-black categories is still small, but we are changing the mix every quarter almost with our new innovations that we are launching. So we hope that, and we do plan to see growth coming back in the Tetley markets. Of course, Tetley is also a significant brand in Canada. We are #1 market share leaders there, and we have grown there. So it's a mixed story.
So speaking about changing product mix, how did premium and your innovative products contribute to your overall financials, and what percentage of the total revenue is now coming from the so-called premium category?
So in the green tea category, we looked to do something differentiated, which would give Tetley brand the right to grow faster in a growing category. And we were the first tea company that innovated fortification of tea with vitamins. And we managed to clear all compliance that are required in UK and Europe in terms of the formulation of the product. So we've launched super green teas as a new category of green tea offering, fortified with vitamin B6, vitamin C and vitamin D, with all the attendant benefits that these vitamins give. And that has been a fantastic hit for us and has shown us very good growth, not just its rub-off has not just been increased sales in green tea, but a rub-off across the Tetley brand, which we have seen, and this we had launched a year and a half back, and much of the Tetley's story of gaining market share quarter by quarter for most of this period has been because of innovations like super green teas, launching Tetley into the fruit and herbal category. And some of these new offerings have been some very good for the brand.
Right. So what percentage of revenues come from premium brands? I understand it would still be relatively small because it's new, but how do you see that segment growing going forward?
Yes, so you're right. Right now, in value terms, these innovative new non-black tea categories are small. I would say in the UK context, in the UK revenue context, they would be high single digit in terms of percentage of how much they contribute in terms of sales. But going forward, our attempt is to accelerate this number significantly.
After how many quarters of double-digit EBITDA margins, what has hit you in Q4, and will the weakness persist?
In the consolidated picture, the problem in quarter 4 has been our unbranded business, namely Tata Coffee, which has had a very bad fourth quarter, and that's a subsidiary of TGB, so that has pulled it down. However, if you look at the India, which is a substantial part of our operating income, the India business has actually improved margins. And the second thing about quarter 4 is our business has got a seasonality element, and it needs to be seen vis-a-vis quarter 4 previous year and not quarter on quarter from the previous quarter. These were my 3 comments that explain the picture in terms of quarter 4 margins.
Right. What about the non-branded business? Has been extremely disappointing, declining 8% in FY18. What's the reason behind this, and do you think things will improve going forward?
No, so the non-branded business has had what we would call a year where it was a perfect storm, and that normally does not happen. When a year where terminal prices tanked, a year when we had unseasonally harsh weather that hit our coffee plantations. Also, in our tea business, which is also part of Tata Coffee, we had a year where our tea business, our tea plantations got hit by an unusual degree of pest attack. So I think, plus the instant coffee business did not quite meet its target. So it's all aspects of the business. As you know, we are in Tata Coffee, we have plantation business, we have extraction business, and it's a B2B business. So I think those are a mix of some of the reasons that contributed to it.
Tata Coffee has been a pain point. Would you believe that that pain has bottomed out?
I would say so. Also, we have invested in setting up a plant to increase our capacity for producing instant coffee. We are putting this plant up in Vietnam, and it's making very good progress. And with increased sales coming from instant coffee, we would be de-risking going forward our dependence on terminal prices and plantations. So I think obviously we do feel optimistic.
The other fear in the market is that of falling coffee prices. Seeing strong Arabica and Robusta harvest in Brazil, while India is still struggling with unseasonal rains. Would tea and coffee prices be a worry for you?
All I can say is for Tata Global Beverages, there is a plantation part of the business which has a different kind of dependency on terminal prices. And we have a branded coffee in 8 o'clock coffee where lower coffee prices is always good news. So for us, we as Tata Global Beverages, we do see both sides of the picture, and for us, I think one doesn't get nervous and over dependence on speculating on on what is likely to happen, because we need to play both parts of the coffee business.
Right, and you know, you had spoken earlier on, and I just want to confirm that, Mr. Misra, about inorganic opportunities, looking at interesting acquisitions. Is Hector Beverages, Paperboat on your radar? I mean, as blatantly as I can ask you that.
We are always open and are studying inorganic opportunities to give us growth, and of course we are focusing a lot on India, and we continue to explore many interesting and relevant opportunities. But you know, some of what, like for example, the company, I don't want to take its name, that you took, these are speculations at this point in time, because we have not announced, or we haven't, you know, we don't disclose which companies we are looking at, but certainly we are looking at inorganic opportunities to fund growth, to fuel growth.
Okay, and finally, you've been on a quest to make your balance sheet leaner. After Russia, China, are you looking at Eastern European portfolios? I mean, what can we expect in terms of getting rid of your small expansions, which were very strategic, which may not really move a lot for your bottom line?
We have said that we will continue to look to balance out our portfolio of businesses, and we want to bring focus into the key geographies and key power brands, and therefore if there are any subsidiary businesses of ours or smaller businesses or loss-making businesses that we think cannot be turned around quickly, we will not shy away from looking at restructuring opportunities or looking at how to bring back focus into our key markets and key brands.
Right, Mr. Misra, we really appreciate you joining us and giving us those details. Thanks very much.